Okay, back for review for Tuesday, November 1st, 2022. Just looking at on the daily chart, we're still just stuck in this kind of consolidation. Tuesday was an outside day, taking the high and then selling off. Now I'm kind of in a 50-50 view where I'm still leaning bullish, but I'm not as crazy about it. If I go to the 4 hour, we had this impulse up. We retraced on Monday, formed a swing low off of this gap and imbalance, then had a very kind of weak rally here, failed to make a higher high, and then sold off, creating this imbalance right here. So this to me is, if the bearish scenario is a pullback here into this gap and then a sell-off to target this gap. I don't really like to see this exact thing, this failure to make a new high and then this imbalance. I was hoping for a consolidation that took the low of Monday and then rallied. So off the bat, this is a warning sign. Now it can still, I could totally be proven wrong. It could totally show me a buy setup tomorrow, and I would take that buy setup. On the 1 hour, if I go back to Asia session, so this was a trade that I kind of was hoping for. I took a screenshot of this before I went to bed, and I said that if this high was broken with an imbalance, that would be a good long. And I was hoping that would be for New York, but no, it happened at the end of Asia, early London, where it impulsed through this high. So just playing it back, the reason why I liked it was the structure is high, low, lower high, lower low, lower high, lower low, lower high, failed to make a lower low, pushed up with imbalance above this high, close above, retest of the imbalance. Remember, we're also getting nice closes here, and then rally. Of course, this rally was very unimpressive. We can see all it did was take Monday's high, which was also this untapped Asia high, right around New York Open, the 6:30 or 9:30 Eastern Time Open. The New York Stock Exchange Open was here. And it had a spike up again, filling this gap. And then with the news that was coming up at, I believe at 7, it sold off aggressively, creating new lows on the day. So I did take 2 trades today that I want to go over. I did not see a valid short for me. If I go to the 1 minute, this would have been a valid short, except, well, 2 things. I don't really trade unless it's really perfect before 10 a.m. New York. If I was watching more carefully, we have a run of this high, previous day high liquidity, and then it just looks really ugly. So I think that's why I turned away, but eventually we get some imbalance here. Right there. That could have been a short entry, but it's not clean at all. And I usually like to see it on multiple time frames, see a gap. So we don't see a gap beyond that tiny one on the 1 minute. So this was yesterday's low. Now on NASDAQ, we had not broken lower at this point when I took the long. Normally I would like to see it hit that low, but the S&P did make a lower low at this point in time. And I thought that there was this divergence here, so I was open to the idea of taking a long here, as this was possibly the stronger of the 2 pairs. I was on the fence. I usually like to see a little bit more of a energetic move. We got 1 gap here, and I wanted to see a little bit more. And then we got the second gap here with pretty decent candle closes here. So decided it was worth the risk. So I got in right around here, and I don't know exactly where my stop was, but I got taken out for the loss. And just looking at it again, I mean, this wasn't the best looking setup. It just looks like an impulse and then a corrective leg to continue lower. If this was just way more convincing of an impulse, then I think it would have been a better, higher probability trade. But that's okay. So what happened after that? So on the hourly, we created this gap. So we had this gap. And then if I go down to the 5 minute, we can see that we wicked above it into this imbalance on the 5 minute chart. And then on the 1 minute chart, it's even cleaner. Now this is during the lunch hour, but it was just very, very clean. Again, this was the 5 minute gap and also the 1 minute gap here. We spiked above these highs and then had a very nice displacement lower. And that was the entry right here. And I was aiming a little bit lower, but I took off most of my position here at the low. So it basically nullified the loss from earlier, and then my remaining position got taken out here. A little bit ahead of break even, right around this level. And then so that's it for what happened yesterday. And so, as I said before, this was the bearish scenario. And so the bullish scenario is this impulse. We were retracing a little bit deeper. Now we're below 50% and we're starting to show some support. And if I just play around with the time frames here, so in Asia right now, it's very possible that we're trending down, low, high, lower, low, lower, high, lower, low, lower, high, fails to make a lower low, impulse higher through that high here with a gap. We come down, retest here. So I do see in the short term the possibility of this being some sort of a low, whether it's just to come up and come for a sell up here. That's very possible, but I do currently still hold a bullish view. Remember that on the monthly, we have a new month. So more likely than not, we get some move into this imbalance. Doesn't have to, but it's something I'm keeping an eye on. So at this current stage, heading into Wednesday, FOMC is tomorrow. So I do expect the market to go sideways in the lead up to it. So yeah, I think the long scenario will just be, I'll have to see the price action, how it forms over the course of London. But if we just stay in a range, and then if we spike the low at a certain time of day, or if we break out and come back for a retrace, we'll have to see what it does come New York session. But that's it for today, and I will be back tomorrow.